I'm Greg Bennell, and welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights to help boost your trading potential. Coming up, chip stocks still in focus again. Nvidia unveiling its next generation of gaming chips. Companies also teamed up with Uber to advance self-driving car technology. That and Uber's announcement of a $1.5 billion accelerated share buyback is catching the attention of investors. Plus, our trader debaters standing by ready to explore the bull and bear cases for retail giant Costco. That's all ahead. You're watching TD Active Trader Live. We got half an hour of trading under our belts. Not deep into the trading day. Let's check out the market action, though. The S&P 500 has been off of its all-time highs in recent sessions. It's trying to make some gains this morning. Had a nice pop yesterday. Let's check out the heat map and see what's moving under the surface. It was all about the tech names yesterday. Right now, Nvidia's not showing up in the pre-market. I thought it would after it was at the Consumer Electronics Show in Vegas. Right now, though, it's pulling back about 2.6%. If there is some movement in the market, it seems to be in some of the healthcare names like Lilly and Merck. So an interesting move there, but tech is not doing the heavy lifting today. We do have news out of Nvidia, though, from Vegas. Obviously, the Nvidia story has been about artificial intelligence, those chips, but the customers are deep-pocketed customers, the Microsofts, the other big tech names of the world, because they are expensive chips. Nvidia announcing that they're going to take that technology, that framework, start putting it into PCs, into laptops for gaming. Remember, they were a gaming microchip company before they were the big AI name. So it's interesting stuff indeed. Check out what is moving, though, perhaps holding on to it. Getty Images and Shutterstock. Not names that we talk a lot about, but when you see a pop like that out of the open, you wonder what is going on. Well, it seems that we're going to have these two image databases company joining forces. We're going to see $3.7 billion merger of these names. Getty up, Shutterstock. This is interesting too. There's a bit of an AI angle on this, only in the sense that when you think about traditional images and the money that a name like Getty has made from selling them to publications, well, AI is encroaching on that territory as well. So a bit of a joining up there of forces to perhaps work its way into the new future of images and the new future of everything because of AI. And that's your market update. All right, joining us now for a more technical take on what is driving the markets for our first show of the year. We are back, gentlemen. Glad to be back here in Amin and Jason Nadek from our direct investing educational team. Let's talk about, well, let's get it out of the way first. We all grew beards. We entered a pact for the new year for the show. The beards, we'll see how they fly for the audience and fly for the people who actually put us in front of the camera, but we'll go for it today. And beyond that, we have other things on our radar. There's important things going on in the world here.
Yeah. So happy New Year, of course, to our viewers. This is our New Year special with the beards going on. Time to unpack and see what the first week is kind of held out for us here. So I'm going to start with the NASDAQ. You mentioned some big tech names off the top, Greg. So let's look at the NASDAQ 100 index and see what's happening here. We saw it just towards the end of that supposed Santa Claus rally. Didn't exactly play out the way that traders were hoping for. We saw a few sort of a downtrend happening there. But interestingly, this week it actually popped. It breached that 50 moving day average, and we can see that point right over here, the 50-day moving average. It was a false break, wick through it, and then bounce off of that level. And in fact, just yesterday, it actually gapped up and is now back on that upward trend that we've seen that it's been kind of being held to. Now, the big news that's coming out of that, one is Microsoft had come out with their AI story saying that, their data center investment is running higher than expected. And they're noting that AI-enabled data centers to train AI models and deploy these AI and cloud applications are going to, again, further, they're deepening their pockets and spending that cash out there. But also, going back to Nvidia, they're obviously speaking at the Consumer Electronics Conference as well. So a lot of analysts will be putting questions, obviously, to Jensen Huang and seeing what new tech is there, what the forecast is, and maybe assuaging or easing some fears about the AI weakness that supposedly was a bit of a narrative towards the end of the year there. So we'll be keeping an eye on this, see if the Nasdaq can breach that level, and see how that shakes out there. The other thing that's also kind of in the headlines and making news, and we'll just kind of cue this up, is the US dollar index. And I'm just going to bring that up over here for a
US dollar strength has been a big market story for a long time. And the natural question is, when's it going to end? But look at that chart. Look at the move in the Dixie since October.
Since October, you know, we've gone from that 100 level all the way to this high of 109. And I'm actually just going to try and zoom out as much as I can here just to give a comparison on when we were last at these levels, when it hits these highs. And this is back, you know, end of 2022 that it breached these levels. And usually when a strong greenback, that's usually not typically a good sign, because that makes a lot of those imports for those countries a lot more expensive, and that can obviously have a trickle-down effect over here. But the news that we've also been seeing is a few major currencies that are gaining some strength. The euro had gained some 0.7%, I think, was it yesterday. And this is on the news that apparently these tariffs that were being spoken about, they may not be as sort of wide-reaching, and they're going to be targeted to specific sort of critical and highly sensitive sectors that the U.S. is probably going to do. That has also played down onto the Canadian dollar, and we actually have an index for that. So XDC is what we're going to be looking at, and this is the Philadelphia Canadian dollar. And this just tracks the Canadian dollar. You can just, basically it's an invert, like you just divided by 10 and you get the rate right now. So you can see we've also gapped up, in fact hitting a high since October, 0.7 gain there. It's a 3-week high against the greenback. So we're seeing, and this is off of the news of the tariffs, crude oil is surging as well. And then of course this change in guard apparently with Trudeau resignation, that's buoyed up a little bit of the cheer on the markets. Markets don't like uncertainty, and so that's something that was looming large over the markets. The final thing we'll look at is just to cap off the S&P 500. We know it had another significant year, 23% gain. This is 2 years in a row now. 2023, 2024 closed out with plus 20% gain there. A lot of that gain, though, however, was attributed just to a few names, and it's the Mag 7. Now, out of that 23% gain, a fifth of that was contributed by Nvidia alone as part of that, and then 55% was the Mag 7 that sort of closed that gap up. But what we're looking at is the S&P 100-day moving average chart, and what this tells us is how many of those participants are trading above the 100-day moving average. And right now you can see this trend where we're definitely in a significant downward trend. We hit the low of 34, so that means there's only 34% of those stocks trading above their 100-day moving average now, and it's been trickling down there. So when we talk about overall strength, the breath is pretty bad in the S&P 500. Let's just see if what that's going to unfold for the new year, and if it can break past that sort of resistance that it has above at that 46 level.
And the power of Nvidia, I mean, the fact that Nvidia looked like it was going to be up in the pre-market, turned out at the open it was down, and it's dragging the broader market down with it. Nvidia, AI, Uber, so much going on. What's going on with Uber?
You're right. That's late breaking news from a little bit of a partnership with Uber. That's on top of the other announcement that you teased off the open, how they're betting on themselves. Right, they've got a pretty significant, with a high-paced, buyback plan. They're looking to, they've got a $1.5 billion agreement with Bank of America to do some buybacks. Got the chart up here on the screen. I wouldn't go as willing to say as an afterthought of a company, but I've seen analysts calling Uber as beaten down, and certainly they were much, much closer to their 52-week lows than they were off their 52-week highs. But the company really looks like they've consolidated. Even before the news came out, around $60, they found some support in the market, some people seeing value, and now with this news, you can see that the last 4 candles that we've essentially gapped up over the last 4 sessions, and we'll see what comes of this partnership, if they're able to implement more of the autonomous driving into their vehicles, and as well, the share buyback. They're maybe getting at an opportune price that might be playing into it, but it's a pretty, once again, big bet on themselves.
It's probably the future, right? Cars driving themselves. But I took a few Uber rides over the holidays when the family car was out there with someone else when everyone's back home. I enjoy the conversation. I want to find out about the person's life. Usually they want to tell you about their life. I don't know. Well, I guess the AI can make up a life for me. I'll get in the back of an AI. It's like, tell me a story about yourself. It'll just concoct something. But the human touch.
Anyway. Hey Siri type of interaction.
Yeah, the future's not for me anyway, as evidenced by the gray on my chin. So thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.actortraderlive@td.com. And for more information about the ActorTrader platform, scan the QR code on the bottom right-hand side of your screen. This is going to take you to our TD ActorTrader Live website. website. And I want to highlight, if you scroll down and click on the Explore TD Active Trader, you'll find a tab that says Attend a Masterclass. Well, this Wednesday at 2 p.m., our very own Jason Natick hosting an interactive session about TD Active Trader. It's designed to get you acquainted with the platform. It's going to show you how to place and manage trades and get hands-on with the charts. It's also going to answer your questions as well. Sounds like a good time. Registration is required and is open now. All right, it's time for trading, debating. This week, the stock in the spotlight is Costco. Before we get going with the debate, just want to remind our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it is important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to the stock of the hour, Costco. What made you guys pick this stock to debate?
Well, I think it's so ingrained in a lot of consumers, retail life there. They go to Costco, and who can forget about the $1.50 hot dogs, the, I don't know, what is it, $5 rotisserie chicken that you go for. So it's just so ubiquitous, and we thought we'd put it to the test and see how it shakes out as a business.
It always blows my mind. It doesn't matter what time of day you drive by a Costco, at least in the town where I'm at, where the parking lot's always full. So it's, where are these people and why are they there? But they're always there spending their money. My
oldest son got in trouble last summer on his summer job. They all broke for lunch a little earlier than noon to go get those $1.50 hot dogs. And they got busted by one of their regional managers. But that's the lure of the hot dog, all right? Okay, let's get some time on the clock for the debate now. Of course, to refresh our audience for the new year, 2.5 minutes each for our bulls and our bears to make their case. Then a little bit of time to counter as well. We draw from a hat to try to figure out who's going to be the bull, who's going to be the bear. And I think, Hiran, you got the bull case, so why don't you kick things off for us? Sure
will. All right, so I've got the bull case to run on Costco. So let me talk about their business model first a little bit, just to give a primer on how they operate, and then we'll crunch into some numbers. They've had a relentless bull run over the past few decades. We've seen and I'll show the price chart in just a moment's time. But they are probably one of the best performing companies on Wall Street just over the last couple of years, based on the charts we're looking at. They've been able to combine financial resilience. They have innovative offerings, unique offerings as well, might I add, and I'll talk about one of the unique offerings. And they just have a fierce loyalty with their members that they've garnered over the years. They're also synonymous for shocking value and quality, and I think a lot of the members that go there is because you get that quality and you get it at a value point. And these days, when everyone's kind of vying for your dollars in your wallet, Costco kind of comes out at the top over there. In terms of their sort of storefronts, or what they call warehouses, they have 897 as of this recent quarter. They're on pace to expand another 29 now. 617 of those in the United States, 109 in Canada. They have a global footprint. We're talking about Japan, China, Mexico, UK, France, Finland, you name it. There's a bunch of countries that they're in already standing up. Now, I want to just talk about their distinct model. It's a very ultra low-cost business with high volume sales. That's how the retailers work. But they're very diligent about keeping their pricing very in line. And 12 to 14% is just the markup rate that they're going to be having over there. Now, I do want to talk about the technicals for a moment, so let's just pull up the chart and also show that and show you how the stock has been moving. So one thing I've just pulled up, I'm looking at a daily chart on Costco, and what we've noticed over here, I've seen this sort of bull flag pattern that's emerged that just came out of the summer here, and it broke out and it's kind of run up to its high. Recently, it hit its high back in December to $1,008 there. Now, there is this major sort of support area that it kind of retreated back and bounces off of, but these are new high levels that it's also reached. Now, the other thing that I also indicate is, let's look at this channel here, and I'm going to go onto the weekly chart to demonstrate this channel to show you what the price action is looking like over here. So you can see, when I talked about it's kind of one of the strongest performing ones, is we can see from back in 2023, once it sort of chopped around and started breaking off of this channel, it's been just able to carry that momentum into the price there. It's tested this channel, so I'm cognizant of that fact, but I think it's still going to run and stay within there.
There you go. I thought you were losing. I was going to take you off guard there. I think I had you had that one eye on the clock too while you're in the trust. When you guys just put your heads down on the trust, like, oh, I'm going to get him with that bell. Jay, you heard the case. What do you say?
I did hear the case. All right, now, first, full disclosure, I made a Costco trip yesterday. My wife and I made a trip there, and I did get I go for the Polish sausage as opposed to the hot dog. It was wonderful. We went in there for cat litter, walked out with $200 worth of stuff. So it was quite the eventful trip.
Go.
But just because, you know enough about me, but just because I'm spending money there, it doesn't necessarily mean that there's going to not be opportunities to make money on pullbacks on even profit taking that's out there in the market. I was expecting you to hear about sales and revenue and all of those things, and sure, there's earnings per share beats, and we had the positive surprises, but there's also some underlying issues that are starting to pop up that might display some sort of weakness. Yes, we're still getting growth in terms of sales, but that growth is slowing in terms of earnings per share, free cash flow. It's all continuing to grow, but now at decelerated rates. We're also seeing those profit margins that you're talking about. We're seeing those around 12%, 12.5%. That's in the lowest 10% of their industry. So yes, and that's part of their business model, but it doesn't leave them much meat on the bone for investors. Another thing that I wanted to talk about is there was a significant, in terms of, we saw a big pullback off their earnings, and I'll show on the chart, we've had that happen, 3 of the last 4 earnings, there's been pullbacks on earnings, as much as, close to 10% earnings. That's a significant amount, but we saw a revenue, what do I look at? Membership fees and sales, they were down by a smooth 4.3 billion. So that's not nothing when we're talking about a balance sheet, even somebody as a Goliath as Costco. But let's jump into the charts and we'll take a look to see kind of what some of the technicals might be showing me. Now, yeah, sure, we're on an undeniable bull run over the last 10, 15 years. You probably even go back longer. But if we're starting to zone in on more recent times, yeah, I'm noticing those same support and resistance lines for us here, and we're now at a point where we've pulled back, and we're now at that previous support point. But one of the more recent things that's actually popped out that's kind of interesting to take a look at is that we've started to see some price action. Let me zoom in on the chart so we get a better look at that. We've seen a double cross. It's not quite that death cross that we're always looking to see here, but we've seen the price cross both the 21 and the 50-day moving average. So we're starting to see some weakness that's starting to creep in there. And one last thing that I want to point out for me, it's one of the things you want to wait for confirmation. You want to wait to just have the pattern can completely play itself out. But we've got a head and shoulders pattern that's starting to form that could really start to show there's a measured move down. That could be in the near future.
All right, we've got the bull, we've got the bear. Now you have 3 minutes just to start picking apart each other's arguments. So we'll let Hiran have the first word, but don't be afraid to jump in there, Jay.
Jay, I'm gonna jump on the point where you talked about the revenue decline and the memberships. According to my data, I actually am going to politely decline and say deny that number, because they've in fact increased their membership by 7%, 7.6% in fact. So they're currently sitting at 77.4 million paid members right now.
Same number.
Exactly, and nearly half of those were executive members. Now remember, the membership also, let me remind, the churn rate is also very, very low. We're sitting at about 93% renewal rates on these memberships. So when you think about creating sticky members, they're getting a lot of value, and Costco's creating an ecosystem. They're not just going in there to get your hot dogs and your chicken and anything else.
Cat litter.
But cat litter, jar of pickles, whatever you want to call it. But you can go in. Their e-commerce space has also grown. They grew 13% on the e-commerce. And guess what the heaviest why was one of the heaviest traffic visits was because their people are buying gold, silver, and platinum bars.
I forgot about that.
That's a thing that they ventured into, and it's very strong demand that they're seeing on the metal side of things. And all of this is all to say that the membership dollars trickle directly down to the bottom line. And as long as that remains healthy, you're in a good balance sheet position.
Yeah, no, all is not gold in terms of everything membership, right? Sure, your customers could buy gold, but when we're thinking about membership, we need to also kind of start peeling back that onion a little bit. One of the things that kind of jumped out to me was renewal rates. Right, sure. Costco did increase membership prices, and they're still making revenue. But those customers that you're saying they're very sticky. But guess what? As opposed to 90 now, albeit almost 93% renewal last year, dropped to 90.4%. So we've seen almost a 2.5% drop in renewal rates, which is that's less that's less repeatable.
That's globally, Jay. Globally, not America. America's 90% globally there.
Right, and to that point as well, you're talking same store sales of increasing, year over year, but You've talked about new warehouses being built. They're running to a point where there's a potential that those same store sales might be at risk if the more prevalence of these warehouses popping up on everyone's corner. That they're just going to be currently like eating each other's hot dogs for as opposed to going down to your local store. You've now got one that's even closer. That's going to make it even that much tougher to continue to grow at the rates which investors are clearly expecting to see.
Yeah, you know what? I think they're very decisive about how they do their locations. One thing I'll talk about the ecosystem and unique offerings. They're actually they're building an apartment building in California on top of a warehouse, a new one. So you're not going to have to fight for a parking spot now because you get your own secured parking spot. You get some basketball courts to enjoy as well, and then you can go down and get a hot dog for lunch if you need to off of your workday. Yeah. But this is all to say that they're creating a compelling offering. The numbers, I just want to talk about debt because the ratios may seem a little bit over expensive, but the debt numbers, they're the lowest against the major warehouses. So Sam's Club, BJ's Wholesale, they still stack the lowest there.
Bring it one more time. Yeah.
Ring them out. We've heard the bull, we've heard the bear, we've heard the counter. Now we get into how you could possibly trade it through option strategies if you're the bull or bear. We'll start with the bull case.
Yeah, absolutely. So I'm just going to bring up my chart over here, and we'll go back to, let's go back to the main set over here, and I wanted to show this to our viewers. So one thing I was looking at as with the trader, and Jay had noted this, like we've seen Costco hit these highs, they topped, and typically when you're in a strong bullish or upward trend, you're going to see these sort of pullbacks come up naturally, of course. So one of the things that I marked was when I was looking at a pullback was looking at this, first of all, this channel, it kind of bounced off of that channel. So that's one key thing I was looking for. And then if we go on to this one, I just wanted to see that it tested off the lows at this 900 level, bounced off of it, and is sort of back on its trajectory. So one thing that I was eyeing was looking at a strategy that's more neutral to bullish in nature, and the trade would be a bull put spread strategy we're looking at. So if I go onto our trading tab here, let's just bring up the option chain. Because this strategy is an income geared strategy, I'm looking to collect and keep the premium. I really want the stock to kind of stay where it is or move up, if anything. So what we're looking at is time frame wise, I the sort of February cycle there, which is about 45 days out. This is kind of sort of the time frame where you want sort of theta decay, which is the time value to erode, which is what helps you when you're doing this strategy. So in this one, just again, going back to that chart and based off of where we see that support zone hitting, looking to sell the $900 put there and buy the 880 strike put further down below. So this is what would be a 20 wide spread. Right now it's bidding at about like $5 and change on the mid. So if we get about $5 is what the credit will have. We want to be able to, if things all go well, the max profit situation is going to be the credit that I'm going to be selling it for, provided that the stock remains above 900 on the expiry day. If it doesn't go well...
Yeah, what's the risk here if the trade doesn't work out?
So here's where the risk is going to be. If the stock does pull back further than, drops below the 900, and in fact goes below my long strike price over here of 880, then I'd be in a max loss situation. And the way I'd figure that out is basically the difference, which is $20 minus the initial credit that I was able to collect. Let's assume it's just $5 here. So $15 would be my loss situation over here, or in other words, $1,500 on a one credit contract.
Right, interesting. Potential way to play it if you were the bull, if you were the bear, what's a potential way to play it?
All right, I want to show us back on the charts as well, because I've got a bit of a similar story that I want to tell, but what the strategy that I'm thinking about is going along with a put. Now, the reason, what I've identified here is this, looking at the support and resistance that we have. If just to kind of further follow up on the head and shoulders pattern, if we can see the right-hand shoulder develop and retreat back towards that our resistance line that we have, or support line that we have, then there's a pretty sizable drop that could be in the offing, and at that point we're able to get ourselves involved with a put and hopefully manage our risk by just keeping our premium low. I'm going to talk through the kind of strike price selection in just a moment. But looking here at, right around $910 is where we're at. But the next level of the secondary line of support is kind of showing us around that 870 level. So I'm using those kind of lines to kind of define kind of where I'm starting to pick strike prices. So let's jump into the option chain to kind of take that one step further. I do want to have, similar to kind of what Hiram was talking a little bit around, time decay is a benefit for short traders. Well, guess what? It works against me when I'm thinking about doing a long trade because because that's time is premium that's eroding off of my investment. So if I can buy a little bit more time, that further out in time, that decay is at a lesser degree. So I'm looking at something here that's out, same 45 days to expiration, and I want to compare that to maybe the next month out, so we can think about starting to control our costs here. But thinking about we said that secondary line of support was around 870. So if we want to find something to purchase a little bit, just a little above that, so we can capture gains if it goes down to that point. I'm eyeing these 875s. These are 865 by 940, so maybe I can get them for $9. When we're thinking about buying puts or buying any long option, your initial investment up front is what's going to be your max loss. So if everything goes, if it doesn't go down, because I do need it to go down in my direction, my max loss is going to be that $900. But I do have potential gains all the way down to zero if the stock does move down. Now, if the secondary way to play this, if we go ahead and move this out to, let's March 21st, because we're outside of the weekly time frames at that point, we can see that the 875s, let me scroll this down a little bit more here, 875s, it's double in price for buying 1 extra month in time, so you're getting involved with much more capital, so more risk to you. The way that you could play that on top of that might be to sell something a little bit lower and kind of leg yourself into a bear put spread, a debit spread, to bring back a little premium to offset up that upfront risk and that upfront cost.
Interesting potential strategy there, and we understand the risks behind it as well. Thank you, gentlemen, for laying out the bull and bear cases for Costco. Just a reminder to our viewers, the debate was for educational purposes. It does not reflect our personal opinions about the stock. Now, before we go on, Jason, you're going to elaborate on the benefits of the heat map. We show the heat map off the top of the show.
You do.
Walk us through it.
This is a tool that's clearly near and dear to your heart. It's a great visual. It's one way. We all know about watch lists. We can get a list of stocks. Well, here's a nice way that you can really get your attention drawn to what's moving the market, what might be going the other way, right? To see some outliers. So let's jump back into the platform. I'll show you exactly where we can find it. It's in the Market Watch tab. Now, mind you, if you're building your own experience, that we've walked through building custom experiences before, and by the way, if you join my masterclass tomorrow, I'll certainly be talking about customization as well. But it's under the markets drop down, where you better find that and add that to any existing workspace. But looking at the out of the box section here, we're going to go to Market Watch, and lo and behold, we've got our heat map that's available here. I'm looking at the S&P 100, and here it shows, we can see that Apple, compared to Nvidia, these things are broken down by market cap. Just the deeper, darker green, the more it's going to be up, and the same thing with the red, the more it's going to be down. Costco happens to be in consumer defensive. You can see that it's down a little bit today, so things are going my way in terms of the debate for today's session. But there's lots of other ways to get more out of heat maps from here. You can actually break things down by sector as well. I'm just going to close up the public list, and if we go down, we can sort it by industries. As I said, Costco's in consumer defensive. If I go into consumer defensive, we can see how Costco is performing against many of its peers. So you're doing a real quick level set for you there as well. And we're not done yet. If you've got your own lists that you've spent time crafting and curating, you can also get those in the heat map. That's on the left-hand side under the personal section. If we bring that to the top here, personal there, and under list 1, you can see there's a list that I've created. Many of the stocks that we've debated here on this show are in this. Costco's here, Meta's here, Shopify's here. So there you go. A nice tool to kind of bring some nice visualization to the platform.
I'm a big fan of the heat map too. We use it every day on the Money Talk Live show. It really just paints a picture and then gives you a nice starting point to say, that's interesting, let's take a deeper look. If there's a stock you at home want to see our debaters go head to head on, just send your suggestions at td.activetraderlive@td.com. And for more information about the Active Trader platform, including information about more compelling trading ideas and theories, scan the QR code on the bottom right-hand side of your screen. You're going to find some great resources under the Learn More tab to help enhance your trading skills and amplify your knowledge. All right, the show always goes by so fast. Before we leave and break for another week, I want to hear what's on the radar for the rest of the trading week. The world's, I know we had a few official trading days to start 2025 last week, but you get the sense that the world's really starting to ramp up now.
Yeah, I think after this week, we'll get into the full swing of things, but it still holds. There's a lot of economic data that's still coming out in this first week of the new year. Importantly, that's something that I'm going to keep an eye on. The jobs numbers are going to come out, so the unemployment rate is due on Friday, and then we have the employment jobs report as well at the same day. Now, this is going to be an important, very closely watched sort of numbers by the Fed. And again, this is
Yeah, more hawkish Fed to end 2024.
Exactly.
So what was the job market telling us?
Yeah, exactly. So expectations are 4.2%. So the unemployment rate, they're expecting it not to change and remain where it is. The jobs numbers looks like there's going to be expectations of a little bit of an increase there. So we'll see if that's going to hold true, and see whether that reemphasizes the thesis that the Fed is building and whether they're hawkish tone there. The other thing, just to remind our viewers as well, tomorrow, Thursday, is in fact going to be a non-trading day on the U.S. markets in commemoration of the National Day of Mourning for former President Jimmy Carter. So take a break, but we'll still have the data coming out there. And then the other one that I want to look at is, Jay mentioned there's a number of earnings that are going to start kicking off next week, but towards the end of this week, we have Delta Airlines in the headlines. And I just want to pull up a chart just to talk about there. So Delta Airlines is going to report pre-open on Friday morning. EPS consensus is $8.74 and a revenue of 14.65. And they've had some notable kind of headlines that might be painting the picture of how the quarter might be going for them. One of them was, the TSA released their screener travel data, and they noted that this was the busiest travel season on record that they had, and that was between December 19th and January 2nd. And with all of this travel, that might be a little bit of a boost to some of those beneficiaries, which will be those airlines. Other than that, there was a report by this company called Cirium, which publishes the most on-time airlines. And Delta, in fact, ranked as the best U.S. airline for being on time, 83% of the time, but it also ranked third in the world as well. Ooh. So, there's nothing more that, flyers like than being on time, getting to where they need to go there. So that's certainly something that's going to help. So we'll look at the chart. They've been on a strong trend. They broke out through that. But one thing, they've just bounced off of this, and I'm just going to bring this up. You can see there's a dragonfly doji candle formation. That's typically a bullish candle that forms right off of a swing low. And this is kind of bounced off of there. So just keep an eye, and then we'll see what the report holds on Friday. See how it shapes up.
Watch. What are you watching, Jay?
Well, I'm happy to hear about Delta being on time. I'm flying with Delta in February, so you leave me feeling good.
So. It is true. If I got to get to the airport 2 to 3 hours before the flight, just get me on the flight.
Absolutely.
Get me there, right?
Yeah, the holiday season, it might be over, right? You're still saying maybe Happy New Year to the people that you've seen in the office for the first time, but there's
a limitation on that.
There
after
is.
The next couple of days,
then it's done.
Happy New Year.
But we're all keeping an eye on holiday sales, right? There's industry reports that are out from online sales that caught my eye. Record-breaking numbers, 1.2 trillion was produced, which is a significant 3% year-over-year growth. So that's going to really kind of bring my attention to the federal sales report is going to be is coming out on the 16th of, and it's a little bit, it's after, we've still have a show before then, but still it's one of the things I wanted to keep an eye on. One little tidbit of information with regards to that, there's also been a huge uptick in online returns as well. 28% increase from the previous year, or $122 billion of merchandise has already been returned online.
It's all those people returning gold bars and platinum.
No doubt.
Jump in the mailbox, it'll be fine.
And then the last thing here, but earnings, a bit of a slow burn this week. But so next week is when we really get things kicked off. But there's something out there for everybody. We've got Constellation Brands, Walgreens is a big one, Tilray is out there. So something for everybody is out there if you're looking.
It's going to be a good year. Great start to the year. I think I enjoyed the show, sitting here listening to you guys. I hope the audience enjoyed it too. And we'll be back again next week. Thanks a lot, guys.
Well, absolutely.
That's all the time we got for this week's show. As always, investors should perform their own due diligence before trading. And a reminder that it is, as Hiram was saying, a 4-day trading week south of the border. Those markets will be closed on Thursday in honor of the late former U.S. President Jimmy Carter. Thanks for watching.